Hey everyone, Greg Gordon, Vice President of Prevail, and I'm joined by my colleague and valuable Investment Advisor Committee member, Dylan Sales. Dylan, it's great to have you here.
Yeah, it's been exciting to be a part of it. Newly moved to the voted members.
That's
so
right.
It's been exciting.
Well, you've added a lot, and your perspective has really been helpful as we've kind of navigated some of the uncertain times. And as we look at I think, kind of where we are today, there's a couple things that stand out from a global risk perspective that I think our listeners need to pay attention to. And unless you've been living under a rock, you probably are aware of some of these things. One is the Strait of Hormuz, right? We've got 20% of the world's oil supply funnels through that. And right now that's been obviously disrupted. So that's kind of the first thing. That then leads into maybe some of the other aspects of which we'll get into on rising interest rates, potential, I should say, rising interest rates based on oil inflation, I'll cause inflation, new Fed chair. So as we kind of look at these two aspects, right, new Fed chair, Strait of Hormuz, global risk aspects, how are we navigating that from an investment committee perspective?
That's a great question. And you look at it and you see, the global oil supply chain. If we look at the United States, we have plenty of gas here, right?
Yep.
But we're going to feel that price because that's a global denominated number, right? So we're feeling some of that pressure. We're able to withstand it the time being. But I think the new Fed chair is the biggest key point there, right? You have a new Fed chair who is coming in an environment that you may have more inflation pressures with the price of oil and energy going up. And when you have inflation, the Fed usually has a couple different levers to pull to fight this. Right? So when inflation's going up, the lever that they have historically pulled is rising interest rates.
Yeah.
In this economy, I don't know if I would rise interest rates, right? Especially in the AI race and the demand that's going on.
Be pretty disruptive. Yep.
Yeah, very disruptive.
There's a lot of pressure too, public pressure.
Yeah, that's right. So it'll be interesting to see what the new Fed chair does. I think there's going to be a lot of change happening in how they run that operation, right? From a media perspective, because a lot of headlines have created volatilities in the market. That's something that almost needs to be stripped back out, and they need to be completely independent of the headlines.
Yeah.
So
yeah.
It'll be interesting to see what tools they pull out of the toolbox to help combat, those two scenarios.
Well, what's interesting is these risks coexist. They exist side by side. They influence one another versus being isolated out. And I think it creates some not only dilemmas for us as wealth managers, but it also creates opportunity. And, I don't know about you, I don't have a crystal ball.
Yeah.
But we do have the ability to kind of intentionally react and plan accordingly for either scenario to put our clients in a good space.
That's exactly right. When you're looking at it, you're seeing the 10-year rise, the 30-year rise. So looking at those as opportunistic plays, how can we use that? There are many different ways we can use that to our advantage.
Right, various sectors as well to look at. If you'd like to learn more, check us out at PrevailIWS.com.